and welcome to Growth and Value Stocks. My name is James Boyd. Today's date, July 29th. Well, we got one more month of hot in August. I live in Utah, and it's been a little dry. If you're in Colorado, it's been even drier. So let's try to hold on here through the lack of water as well. Just real quick, we have Cameron May with us in the chat. We welcome him and all of you here today. We got with us Kevin with us, Muriel, Will, Ryan, Scott Luck. Aloha back to you. I need to get my Hawaiian shirts back. And also Gary, Richard, Life in the Fast Lane, Jody, and many others. Let's go ahead and get started. Now, just real quick as we get going, remember when we talk about growth and value stocks, they could be examples of bullish or bearish. Sometimes we actually see that maybe one of those areas like growth, value, all include income. Sometimes certain categories of those might be more bullish than others. I would like to start out with an example of a bearish example in growth. So we'll talk about that in just a moment. Now, also, we've been talking about on Monday and Tuesday more about income and value, if you will. And so I would like to kind of talk about maybe kind of why sometimes growth goes down, talk about it from a fundamental and a technical standpoint with a trade example, among others. Now, remember that also in the chat, Cameron did post some our X handles in the chat. We post educational content there. Check it out daily. Also, as we get going, we want to give us a quick reminder that the information I talk about is done for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. More of the story, you get to pick what you want to do. When we also talk about examples, we will do those in the Paid Money software application. If we bring up dividend paying stocks, understand that they may reduce or stop paying dividends. They could raise it, okay? Or even give a special dividend like Costco does occasionally. More of the story is it's not always going to be the same, okay? And also remember when we talk about investing involves risk, including loss of principal, could also even be unrealized gains. Now, when we talk about our examples, let's go ahead and hop right in the market, and then we're going to talk about that example of a growth stock. And let's kind of talk, and we're going to kind of really focus on kind of what's been happening in technology. So first off, I'm going to pull up the SPX EW first. The SPX EW, as some of you made mention of in the chat, that was a brand new high yesterday. Today, actually flagging back just a little bit, down 0.4%. My comment initially to the S&P being able to hold up as well as it has in terms of the equal weight, but also the SPX. I mean, if you look at the SPX, yes, it's gone down, but you would think that actually with the NASDAQ actually dropping like it has, that it would actually get drugged down more. Kind of surprising, okay? Now, the NASDAQ, we actually made mention of yesterday, which kind of broke the 23% line. It broke the 38% line. Path of least resistance on the NASDAQ is still down. Moving averages are still red. Not a surprise if it goes down. And the question we got to ask ourselves is how much more? Well, we said yesterday that we're talking about like clearing it out, like the whole breakout. I called this a TP trade historically, where you break out and it runs up and then it comes all the way back. Like that whole breakout never happened. Now, this is really a lesson in not everyone is investing long term. Sometimes people use ticker symbols as trading vehicles, okay? And that's clearly what's happened. They ran it up and they're running it down. And so if you look at this, if we were to kind of forecast where might that bottom be, 26,000. How much more is that? It's going to be about another 8-10% on the NASDAQ. Now, if we were to double check that, let me just double check this line. Okay, if we were to drop down, it's about 5%. If we really kind of clean house, 6% if it came all the way down. Now, the drop on the NASDAQ so far from the very top to where we are now on a percent has been 10%, so correction territory. If we actually go all the way back down to actually where we fell, where we broke out from, it's 16, okay? Now, that drop, say no more than semiconductors. Semiconductors actually hit the high, and you're going to see that where do we go from top to bottom, or high to current low, 27%. The issue with the semiconductors is we still do not have any major supports. Now, let me ask you a question. Do you see any divergence on this or the NASDAQ? That's a question. Do you see any divergence on this on the MACD, on the NASDAQ or the SOX itself? And if you answered no quickly, that's the answer. We don't see any divergence. So sometimes what happens is, why aren't people actually buying? It's the reality is they don't have a signal, okay? And the price just keeps drifting and drifting lower. Now, if we actually go back to kind of a culprit maybe a little bit today, again, we have the overnight activities, right? Or day over day action abroad in Iran, Persian Gulf, things like that. Oil pushing back up about $6 a barrel on the crude oil itself. Energy actually here today, after being strong, kind of firing back. We'll talk about that in just a moment, okay? Kind of like to look at those airlines and energy stocks. Could there be an energy stock that's still bullish? Is this like a flag here? Is oil going to be up for higher for longer on the dysfunction that we've actually been seeing abroad? Now, those, if we look at, let's say, staples, don't have anything to say on that. Talk about that. Healthcare, kind of more continuation. You see real estate, that's actually down a little bit. Now, these ticker symbols are maybe not the ones you might look at. Feel free to look at the ones we talk about on Fridays. And if you look at utilities, that is not followed through. Matter of fact, it's continued to be the softer one of the area. Keep an eye on that. Now, let's kind of talk about just real quick. Now, by the way, the industry group that we're going to highlight is cloud. Keep an eye on that, okay? Now, I want to kind of bring up an example. Let's kind of show. Now, Lisa talked about some of these stocks like SanDisk and MU, etc., just falling, okay? And what I want you to kind of notice here is, why do they go up? Why do they go down? Well, sometimes they go up just purely technical, trend, momentum, right? Sentiment. Sometimes it could also be that the fundamentals are actually improving, the forecast of the revenue, the forecast of earnings per share. But sometimes what can happen is the expectations really become, well, they're already high, and to keep growing becomes almost statistically impossible, okay? And then if they actually think that those forecasts were too high, it reverses and they lower the forecast fundamentally, but also technically, the stock could just be breaking diagonal support. Now, we've had a little bit of both fundamentals and technicals. This upward trend that we actually saw on SanDisk, you're going to see that we really broke the diagonal support and it just started to crumble, right? Now, so both could be happening at the same time. Now, the example that I want to show, now, if we looked at these, we'd say, wow, okay, it's fallen. Could it fall further? Maybe, right? But maybe let's ask the question, is there maybe one that hasn't fallen as much yet? Okay. Well, the example that I want to start off with is just Dell. Okay. Now, Dell is an example where the stock ran to the upside and is consolidated for a long period of time. Now, the issue that you actually have is if the companies in the same industry group are falling down, this is almost like real estate, like your neighborhood, the prices are getting lower. And even if you had the best house in the neighborhood, you get drugged down price-wise, potentially with that neighborhood. Now, we're going to do an example of a bearish trade. Now, how many of you in the chat have practiced a bearish stock example? This is a foundation stone for learning maybe about other type of strategies. And I want to kind of show this here today in the Paper Money account, okay? Now, just real quick, if we go to the chat, I just want to see. Now, the comment is Dell value or growth? Well, funny we should ask. Now, what I want to do is let's pull this up, if you don't mind. And I'm going to actually just real quick, let's pull this up and let's kind of look at some of those metrics to kind of see what is it, okay? Now, if we take a look at this, I'm going to pull this up. I'm going to type in DLL. Let's kind of look at some of the metrics, okay? And if we pull this up, scroll down. Now, some of the things we're going to be looking for is the price multiples, right? We can actually find those. I'm going to scroll down. And if we go down, we're going to see dividend information, which has been, it got increased by about 20% recently. We can see more right there if we wanted to. Earnings right there has been pretty consistent. Notice that every quarter, it's not just increasing. There can be cyclicality, okay, of the business. Historical earnings, you're going to see that that has really gone from lower left to upper right. With really that Q1 27, they beat it by a lot. And that's kind of been the expectation that that could continue to grow. Now, when we actually talk about kind of some of these, the forward PE, that forward PE is really 21. Now, the forward PE is looking at the earnings per share forecast as the denominator and the price the numerator. So notice that the PE right above where I'm pointing to is 31 and the forward PE is actually 21, which says the earnings per share going forward is higher than where it has been historically. If we look at the PE actually right now, 31, okay? I mean, as far as the tech stock, that's probably not completely unusual, okay? If we're talking about a 4P of 21, if we're talking about something that has growth, that's not really that high, okay? Now, if you also look at, let's say, the PEG, price earnings growth, the earnings per share growth, that's actually less than 1, okay? So we would say that there's definitely some components here of growth for sure, but there's also some value in this as well. Now, irregardless, that doesn't mean it's always going to go up, okay? Now, I'll show you some here in just a sec that have way higher numbers than this. Now, the example that we're going to show, okay, is, now, by the way, who are some of their peers? Well, Seagate Technology. What have they been doing? Oh, okay. What's been happening with Western Dig? It's been dropping down. What's been happening with NetApp? It's been dropping down. So sometimes it could be a good quality company, but it's getting drugged down with the area. Okay, now, what's the trade idea? Well, so first off, if we are in the paper money account, we're going to go to the margin account. Now, I'm not saying this is how the investor has to do it, but I want to practice, okay? Now, what we're going to do is we're in the margin. We're going to go to the trade. On that trade, what I'm going to do in this case is I'm going to go Dell. We have it right there. Now, we know that with stocks, you can actually do what's called long, which just means not, when I say long, that doesn't mean long-term investing, okay? Long means that we're buying. The shares thinking they're going to go up. If we click on the sell, you're going to actually see that we're selling the stock thinking the price is going to go where? Down, okay? You're going to go short. Short does not mean duration of time. Short means which direction do you think it's going to go? Which strategy? Long, bullish, short, bearish. Now, right above right there, you're going to see ETB, easy to borrow. Now, easy to borrow is in reference to, does the broker have shares on hand that the investor could potentially borrow for a period of time? Now, the paper money account does not have the shares. Who has those? Someone within the brokerage account brokerage house has shares that could be borrowed. Risk, if we go short these shares of stock, click on that. The risk is, number one is we're borrowing the shares. We don't know how long we can borrow them for. We might have to give those shares back at some future date and time. Second, the dividend risk. If that company has an upcoming dividend, which it just had that, so we're past that, whoever is short those shares of stock, borrowed, they would actually need to pay the dividend. So we don't have that. They actually went past, the ex-dividend date was the 21st. Now, here's the deal. If we go short the shares of stock, we're thinking the price could decline, okay? Now, what I'm going to do is if we went back to the chart, let's look and see where maybe, and we're speculating, could the price decline? Now, if I were to ask you this question real quick, if it were to drop, where might it try to drop to? Now, kind of when I'm asking that question, we're kind of thinking about support levels, right? Support level being here, and the gap where we gapped up from was really about right there. And then if we look at kind of where we broke out from, it's really about right there. Now, I want you to imagine that you have maybe some other stocks that are somewhat up, maybe some income stocks and value stocks, and you're just watching those stocks, but then you're watching some of these growth ones maybe drop, and you're thinking to yourself, geez, maybe I could actually try to do 2 or 3 bearish trades and see if I can't make potential gains, from those dropping. Now, what I'm going to do in this case is we're going to come back and we're going to actually click on, let's delete that. we're going to right click on the bid. We're going to go sell custom with OCO bracket. So homework assignment number one is paper trade alongside us to learn a short strategy. Okay. Now wait, is this a derivative? It's not. This is shares of stock. Sell custom with OCO bracket. Now, one of the risks that we're going to kind of point out is I'm going to do in this case 25 shares of stock. Okay. I'm just going to use this as a starting point. 25 shares of stock on a stock that is priced at 375. Well, 25 times 375 is like $9,000 worth of stock. Now, if you said, wait, that's too big for me. Well, we might lower it. Let's say we said that's a little bit too much. I'm going to go 20 shares. We don't have to go 100. Okay. Now, what's the risk of being short the stock? Okay. The risk is the stock could gap up. Okay. And it could gap up to infinity. That's the risk. Okay. Now, the stock could go up to infinity too if you're long. I haven't had one of those. It could happen. I just haven't seen it. Okay. Now, data GTC. Now, the biggest thing what we're going to do is we're going to say, look, at what point would we say that the investor is wrong? That, hey, we're breaking out. Well, in this case, what I'm going to do in this case is we're going to go back to, I'm going to even set the stop right above the moving averages. So when we're saying a bearish trade, we're now looking at support as far as the exit on the buy stop. It's the resistance. That resistance we're going to try to target is right around 415.87. Add 2%. So we're going to take the resistance, add 2%. Hence, 1.02 equals 424.84. Now, the reason why I'm pointing this out is, number one is we couldn't break through the 450-ish area. The other thing that we actually saw that is technically damaging is the stock actually gapped down. That gap down open area now becomes the new line of resistance on the price graph. So even if we went up a day or two or three, unless we get up above 401, we're still thinking that the price could drop. Okay? Now, what we need to get out of our mind is thinking that everything all the time is going to be bullish. It's not. Sometimes you're going to go up and down. Breathing is inhale, exhale. Inhale up, exhale down. Tennis, forehand, backhand, right? Driving a car, forward and backwards. Okay? So understand sometimes in the world of technicals and fundamentals, there's going to be some bearish trades sometimes. That doesn't mean that that has to be the bulk of what you're doing, but it would be probably a decent idea to say, hey, if there were some opportunities, could I practice some of those as maybe a minority of things that the investor is looking at? Now, what I'm going to do is if I go back to this, I'm going to put that stop right at 424.18. Where do we put it? Right there, 424.18. Now, the limit on that second row here, that's where we think it's going to go down to. Now, here's the deal, okay? If we said, look, I think the price could go down to the first level of support where we gapped up from, it's really 321. So I'm going to put that right there, 321, dated GTC, right there. So the entry, okay, that, target, that or lower, stop that price or higher. So that's a con. We don't know where, if it gaps up on earnings to 430, could the loss be more severe? Yes. This is the opposite of bullish. So trade example number one is we're going to go bearish Dell, thinking that some of this optimism is, a lot of it is built in. If it doesn't, now, the other reason why we're kind of doing this is some of the other stocks in there like STX, okay, WDC, they've actually been dropping down. And now the one positive thing we would say on Dell is Dell has not dropped as much as the other ones. That's a sign of relative strength. The issue is, how long can that last? Okay. Now, with this bearish trade, we're not saying bearish forever. We're just saying, could the price drop down from where we gapped up from? So what I'm saying is, when we actually look at this, kind of this gap right here in the chart, could we drop down to where we gapped up from? Now, we saw this on Expedia, but in the bullish view. Here we're just saying, can you fill the gap? Can you fill the gap to the downside? Can you fill the channel? The Expedia is just the flip. Okay. The Expedia was just really this right here, which we need to talk about, which is broke resistance and went to the next level resistance. The Dell trade is just really the break of support, the next support. It's the same thing, but just taking a different strategy. Not long the stock, short the stock, just fill the gap. Now we got to come back to the Expedia in just a sec. Don't make me forget. Now, so trade example number one, Dell, short, target, stop. Now we don't know if it's going to go down there, but we're about ready to find out. Okay. Now trade example number one, Dell. I want you to paper trade that. If you've said, James, I've never done this in my life, welcome. Okay. I want you to go on the paper money account and practice alongside with us. Watch the day over day movement. Do you understand what's causing the profit or loss? Okay. Send the order. Now let's go back to the Expedia, which we just brought up. Now Expedia, what happened here? Now we're actually saying on this Expedia, now when was this trade done? Let's pull it up. That was 10 shares of stock. That trade was actually done right on the 27th, 2 days ago. Now those shares were purchased at 279.33. We said, look, try to get the stock to actually go up to, let's say, the price of 302. Now this looks a little awkward because we're like, wait, the high price was 305. Why didn't mine fill? Well, sometimes it spikes up so quickly that those 10 shares might have not filled. Sometimes can happen. If we went back to where we are now, we got to really say in this case, we should really be moving up the stop really aggressively. We could do that, or just move it down to where that price is right now and try to target out of the position. Because I don't think that's really going to make a whole lot of sense, because this trade should have already been probably out anyway. Now, the one thing I want to say as far as this group, right, Expedia, we talked about this. We said, oh, no, I don't want to say it too loud. Okay. Americans like a good vacation, to say the least. You know, my son, he went to Hawaii, he went to Cancun, he went to Cabo, Lake Powell, Scottsdale. It's just unbelievable. Okay. The amount of vacations that these people are taking. I mean, I don't know. It's just funny. I have mixed feelings. Okay, here it is. Now, but so trade number two, we're going to try to target out of Expedia. Okay. Going to try to target out of that. Now, if that doesn't fill, okay, pretty quick, we want to actually come back in and make sure that fills. This alert right there, we never got it to flag back to get a bounce. That's why that alert's there. Now, the other thing we want to kind of make mention of is when you look at Airbnb, you're now going to notice that Airbnb also broke out to the upside, kind of in the same group, right? Now, when we also bring out, for example, the Booking, which is in the same space, there she is. It also breaks out. So this is why when you look at buying a stock, you're usually never just looking at one. You're looking at the group. Because what investors will tend to do, traders included, they're not just going to buy one, they're probably going to buy two or three within the same space. Okay. Now, if we take a look at this, let's also go back to a couple of these others. Okay. Now, I'm going to fast fire through one of them that's actually been quite strong. Dean, hello. Coca-Cola gapped up on earnings. Today went up again as well. Coca-Cola is sitting right there, up another $1.90. Now, we got to ask ourselves, the question is there a target on this? Okay. If we went back on the 3-year weekly chart and we say, what do we got here? Now, first off, I want to double check, is there an upcoming dividend? That next ex-dividend date, the first day that trades without the right to the dividend, is September 15th. So we're still a ways off, okay? 6 more weeks. If we actually went back to the chart, I mean, we're just cruising here. And again, we're kind of in that spotlight of staples, healthcare, real estate. It's been the stronger area. Now, understand that, but I would just want to go back and kind of say, is there any way to kind of gauge where this might try to go? I mean, because eventually they don't always just keep going up. Now, if we look at this and said, if we were going to set a target, where might that target be? We would say 91.98. Now, if we had 100 shares, the investor might say, I'm going to do a blank strategy. You fill in that blank.
But if we go up about another buck, some investors might say, hey, this has been a pretty nice little pop to the upside. This is where we could actually say that other investors in the short term might try to take some targets, sell, in other words, or protect. How many times does Coca Cola go up to that blue line? The answer is zero. Okay. In the last year, Coca Cola has never even hit the white line. So, this on trade number 3 here on Coca Cola, if we go up at about another dollar, targeting out, if investor says I don't do a derivative, second, the investor might say I do a derivative, and they might say, hey, I might adjust the strategy and try to push the sensitivity to direction down. But this is a good problem to have, one that pops a little too much. Okay. Now, I also want to go back to Apple. Okay. Apple did actually go up to a brand new high here today. Earnings on this one coming up tomorrow. Now, we don't have the product announcement. I believe that's September. Check me on that. Man, this has been a beautiful run. Okay. Beautiful. Samsung users, don't be hater. Okay. We can all be friends. Tell me who you are. Now, Cisco. Cisco is one we're going to kind of keep an eye on. It hasn't broken out yet. That one has actually been stronger in the tech space. But the thing is, if you look at the other stocks in that industry group, they've been under pressure. The other one we said we're going to keep an eye on, and I don't have anything to say on this right now, is, let's pull it up. It's a Staples name. I just got to see if I wrote it down, and it's one I do want to bring up. What is it? Let me actually pull it up. As soon as I see the sector, I'm going to know it. Mondelez. Okay, should have known. Now, we said kind of keep an eye on this one. This was the one that was kind of maybe trying to reverse and then broke out. So today a little push on Mondelez. Okay, now the other ones we want to kind of go back to just real quick. Target. No comment. Now, let's look at some of these other retailers. Dollar Tree. Now, Dollar Tree, okay, it's also paid money count, showing a moving average crossover here today. Dollar General. Now, I'm going to kind of focus a little bit more on Dollar General. To me, Dollar General kind of looks like Mondelez, okay, to me. Go back and look at Mondelez, okay? Now, the reason why I said keep an eye on Mondelez is kind of was like going up near the resistance, and on the right-hand side, it was really making the higher lows. I think a lot of people overly focus on resistance, and they kind of don't really give proper credit to really the higher lows. Shame on all of us. Now, so we can learn from that, I'm going to go back to little DG. Now, first off, Dollar General. Now, sometimes there's just points where people are more price conscious. They're watching how much they spend. They're actually wanting value, things like that. Now, Dollar General, if we actually pull this up and we take a look at this, pull it right back up, let's bring it up right there, get an idea of kind of where it is. Now, Dollar General, if we pull this up, scroll down, kind of just want to see some information. Dividends have not changed over the last 4 quarters. Annual dividend, as far as dollar, 236. Yield, 1.87. So not that high. That is not a negative. Because sometimes if that actually, let's say in this given market is probably 2.5% less, the company could have actually growth. If the company is paying out like the majority of its earnings in the form of a dividend, how's the company going to grow? Okay, it's tougher. Now, if we actually look at the earnings, 215 was actually the highest that we've actually seen as of late. We look at the historical estimate versus actual, they were the highest that they've actually been. Okay. Now, when we look at the PE, TTM, trailing 12 months, 17.81. And it's not talking about growth here. Okay. When we actually look at the 4P, 17. Earnings per share going forward, slightly higher than trailing earnings. And you look at the PEG, we're talking about barely over 1. Okay. Now, if we look at kind of some of the competitors, now, pay attention to this, okay? Because this has been a mistake. Okay, I'll tell you what I mean. DG, Dollar Tree, you already made mention of that. But there's Casey. Now, why are we bringing up Casey? Well, remember, Casey was the retail gas station that really had a monster run. Now, this is why you don't want to just look at one stock. You want to say, who are the competitors? Who's across the street in the same industry group? Look at Casey, okay? Hello, okay? Now, here's the kind of the interesting thing. In the world of investing, or just life in general, you can get so blasted distracted. You got to understand that what happens in the world doesn't necessarily affect everything the same. Okay. Matter of fact, some things in the world that are kind of maybe dysfunctional could actually inflame the revenue of some companies. Now, if we look at, let's say, let's go back to DG just real quick. Now, I can hear someone saying, yeah, but it's resistance. Well, sometimes that resistance is not concrete like the Berlin Wall, at least the majority of it, okay, or at least the part that's still standing. Sometimes that resistance can be like when you start poking at it, like jello. Now, if you take a look at this, as investors contemplate what am I going to invest in, which companies could actually maybe have a greater statistical chance to hit the revenue and earnings per share, it might be some of these lower beta companies. Lower beta just meaning that they have a lower correlation historically to the S&P 500. Now, that's a historical stat. Now, if we look at this, we got earnings coming up right here, 827. Now, what I'm going to do is I'm going to right click on the chart. And if I right click on that chart, let me redraw that. This is where we topped it. And I'll even take it from kind of where we had more resistance down to here. Okay. So if I right click on the chart, buy custom with bracket. Now, this is like new trade number 2. Okay. Now, example that we're going to do here is buy the Dollar General. Okay. And what we actually have here is the next fib level, 134. Second fib level, 143. We're going to put the target up a little bit higher. I'm going to take 143, okay? Data GTC, data GTC. Now, if we look at these numbers, if we look at kind of the stop underneath, I'm going to take the fib line that we're looking at, okay? Now, if we look at that fib line that we're actually looking at, now, by the way, IRA says, hey, Casey is in trend phase 4. Trend phase 4 is not bad if that is actually making an ascending triangle. It's not trend phase 4 is not bad for Casey if it's maybe a cup and handle. Okay, so don't use all trend phase 4 resistance. It's horrible. If we're making higher lows underneath, we're in a continuation pattern. That trend 4 could shift back to trend 3, which is price above moving averages, and no signs of resistance. Now, if we take a look at this, I'm going to take 121.44, 121.44 less 2%, 119.01. Now, if we go back to this 119.01, trade example number 2, okay, 119.01. Now, when we talk about the dollar amount, I'm going to have to take it back. We're going to take a full position if we can. 5,900 is going to be about 46 shares of stock, okay? Now, here's the deal. This is a stock class. If you said, James, I was looking at another product and I was noticing maybe another product, okay, that's fine. This is a stock class. So what you're now going to notice is this is a stock position. We're trying to also get up a little run into earnings. 3 to 4 weeks prior to earnings, sometimes you can see these stocks break up or down as investors start to posture themselves for the upcoming earnings. Also, sometimes you can get competitors that announce earnings before this company does, or get maybe updates as far as the company on the preliminary idea on what the earnings could maybe be. Now, we're going to go confirm and send, trade number 2. There it is. Now, remember the stop. Now, this is a long position. Long meaning we're buying the shares of the stock, okay? Second, we actually have a stop that's saying if we go to this price or less, sell the shares. And it could be filled at that price or less. Target, stop, send the order. Now, what I'm going to do is also go back to just real quick, okay? Couple of these other stocks that I want to, now, if we said Dollar Tree, Dollar General, Casey. Let's go back to Casey for just a moment, okay? Now, Casey, what I meant by kind of, now from IRA, the comment was, hey, we're in trend 4, prices up near resistance. Now, if you said, James, I don't recognize that. Well, let's help each other, okay? When we go to that second chart in, no, no, nope. Go to that what, fifth chart in? This is going to show us the trend candlesticks on the daily chart. The fact that we are in, let's say, and you're going to see on the bottom here, 1, 2, 1, 2, 3, 4, 5. Now, 4 is saying the price is up near resistance and the price is up near, price is above both moving averages. That's why the color of the candles is orange. Now, if we take a look at this and we said, okay, is this horrible? Let's go to the weekly chart here for just a second. So we're on the fifth chart in. Let's go one more, please. And if we look at this on the weekly chart, all of a sudden my comments make sense. Because if we look on the daily chart, we're thinking it's a Berlin Wall of resistance, but then when we look at the weekly chart, we're saying, good grief. Okay. Now, if we take a look at this, you're going to notice the last 2 out of 3 weeks, we've been really sitting and tippy-toeing all over that 10-week exponential moving average. This is what I meant by don't think that the trend 4 is always the top. They could just be the consolidation. If we're actually having higher lows underneath, that line of resistance, it might get just bulldozed down, and all of a sudden the investor in their mind is thinking resistance is always going to hold. You got to think that resistance might not always hold, especially if the industry group is going up, and especially if actually we have higher lows on the price graph. Now, okay, now James, come back for just a second. Come back. Okay, could tell that was a hot topic. It is a hot topic to me because I think a lot of times we miss breakout examples like an Expedia because we're always thinking resistance is going to be resistance. Resistance can sometimes just be like jello. Okay, now I want to also pull up Costco. Now, I'm not going to do a trade example on this, but you are going to notice that on the example of Costco, there has been some lower highs over time. Costco, just real quick, you're going to see that in this, you're going to notice some lower highs, equal highs. And the last 3 days, if we said, is there one in that retail space that also might be trying to reverse as well that we have not made mention of? Costco, okay? Now, Walmart itself, James, you just say Walmart. Walmart has not reversed up as much as Costco. That's why I've not said that. The paper money count actually is the example of Target, Dollar Tree, Dollar General. Those are the ones that are a little stronger, okay? Now, let's also go back to this just real quick. Let's go back to maybe Mo for just a second. Now, well, let's start with PM. PM was the example that we looked at initially. We did a trade example, went long the shares. Why did we go long the shares? Well, because it had what type of price pattern. Now, this is a little bit longer than normal, okay? So now what you're going to kind of see is a little cup. This is a very long handle. You don't normally see that, but it's like a sideways consolidation, okay? This kind of being old resistance, that resistance became new floor. Then you actually had what we call the rim of the cup, and that handle really maybe was not a handle. It really became another cup after a bigger cup. Now, this on the right-hand side just kind of going up. Now, I'd be the first one to tell you, it was nicer when it was at 207. I understand, okay? But the stock market goes up and down the last time I checked. Now, if we take a look at this, the stock that we're looking at just real quick to see if we can add to a position is its twin cousin. Which one? Altria. Now, if we look at Altria, we talked about maybe setting an alert. Now, that earnings is going to be tomorrow. That's before the market. Now, what I'm going to do is here is if we take a look at this, we got 77 shares of stock right there. And, well, 77 shares with the stop at 70.81. Now, what I'm going to do right here is we talked about this as it ran up yesterday. It was at the high point. We said, could it come back down closer to support? Where's support? Well, if I draw it, it's 74.39. Let's actually go back to that second chart from the end there, and I'll send this out. So yesterday when we looked at this, we were above the 5% line. Okay. Now, if you said, James, could you share with that the package of charts that we use in our class? Yes. Okay. Let me share that grid with you. And we're going to put that right in the chat. Okay. Now, if we take a look at this, you're going to see that right there. Okay. There's the package of charts. We're on the second from the end. Now, today's price has actually come back down below the yellow line. The yellow line is 3% above the 10-period moving average. The 10-period moving average being the light blue line. Okay? Now, some people might say, James, I'm so scared of what the earnings is going to be. Yeah, I mean, sure, I don't know what that means. Okay? But if we actually went back and actually looked at, let's say, Mo, we scroll down. Now, some of these companies, they tend to be more consistent. Now, that's historically. They might not, that might change in the future. We don't know the future. Now, if I actually came down and say dividends have not changed, that annual dividend yield is 5.67. The upcoming earnings, the forecast, pretty steady, slightly lower over the next upcoming earnings. Historical, this is really where they've been. We haven't had a lot of differences between actual versus estimates. Sometimes investors like that. They like kind of something where the company has had a track record of hitting what they thought they could hit. Now, if you look at the revenue, the PE, 15. The forward PE, 13.16. We're not talking about growth here. You could already see that kind of as we went down here. The PEG, though, is higher, okay? What they're willing to pay based upon that forecast of earnings growth. They've been willing to pay for it, okay? Historically, could that continue? It's cousins in the area. There's Mo and there's Philip Morris. Now, some of these companies, they might not really trade actively here in the U.S., but they might also trade abroad. The two that we're talking about that really trade more in the U.S., Mo and Philip Morris. Now, what we're going to do on this is we're going to come back to this, right-click on the chart, we're going to try to add to the position. Now, that example, what we're going to do is, let's say we buy example given, 50 more shares. Example given, okay? So 50 shares. Okay, we talked about this, looking for kind of a pullback bounce. Now, what I'm going to do is I'm going to use the exact same stop, or let's verify, 72.26 was the prior higher low area, 70.81, okay? Now, what I'm now going to do is type that in right here. So trade example number 3, 70.81, dated GTC, dated GTC. Now, if we said, is there a potential target on this, maybe on that longer term chart? The answer is, we don't know. We actually, like I said to you before, there's really a cup here with a handle, and there's kind of more like an ascending triangle. If we're talking about really setting a target, that target still might be based upon this cup, which if we kind of put a target, the 200 is not, okay, a Fibonacci number. If we're kind of saying a target, we might put a longer dated target, example given, right at 88, okay? Yeah, kitty cat is down. That's why we haven't talked about it. Now, so 88 target, stop, okay? That's saying if we go to that price or less. Okay, now hold on for just a second. What trades do we actually do here today? Now, number one is we did Dell, short, bearish trade. Show the example. Trade number 2, what was that? Dollar General, trade bullish stock. Trade number 3 was actually Mo, adding to the position over going into the earnings. Okay, I'm out of my time here today. I want you to practice trade alongside our class examples to learn. So that way we actually manage the positions, etc. You could follow along and learn together. Now, coming up next, if we actually look at the calendar for today, you're going to see that right here on the 29th, managing an option portfolio with Brent Morse. Okay, that will be coming up next. I want to say thanks to Cameron May for answering those questions in chat. Thanks to all of you. Make sure that you also practice trade the bearish example. If you said, James, I've never done it before and I'm scared to practice it, This is what paper money account is for, so we can learn to see if that's something that you might consider. Okay. So also, this is the calendar for all of our webcasts. Make sure you bookmark that as well. So I'm out of my time here today. Thank you so much for your comments and your participation. Remember that all investing involves risk. And this has been the class on a focus on growth and value, doing an example of a bearish and 2 examples of bullish. I'll be back on tomorrow afternoon with trading the trend at 1 p.m. Eastern. So I look forward to that. And I'll also teach the class on Friday using ETFs at 9:30 a.m. Eastern. So those will be my next two classes for the week. With that said, thanks again, Cameron, again. Thanks to all of you. Stay tuned for Brent Morse coming up next. And don't forget to subscribe and give us the thumbs up. Take care. Bye-bye.